Good afternoon. Today is Thursday, December the 15th, and the time right now in Hong Kong is 12:57, 3 minutes to 1 p.m. And overnight on Wall Street, the most anticipated FOMC meeting finally happened. And of course, within expectation, the Federal Reserve actually hiked interest rate by 50 basis points, which is very much in line with market expectation. But what is more important is the speech given by the Fed chairman in the immediate after the release of the information of the rate hike. And he has telegraphed nothing new. He has basically been reinforcing the idea that interest rate is likely to remain high and for longer into 2023. There will be no pivot in the whole of 2023. At least that take away the uncertainty the market was hoping to see a pivot. Okay, so the market, the Fed chairman has basically killed off the idea that there's going to be any pivot come 2023. Okay, however, he do also telegraph that maybe the rate of increase will slow down. So now the market is actually pricing for maybe one more round of 50 basis points and then followed by 25 basis points there going forward into 2023. So as in reaction, that Wall Street actually came off, but not by too much. Market do reacted negatively this morning at 3 a.m. this morning. Most traders would actually have missed it because it happened very late in the morning itself. I also did not watch this, but I just placed my stop and went to bed. But I woke up intermittently to watch the latest speech by the Fed chairman. And within expectation, market actually pulls back. The highest it traded in the Dow Jones this week was in the aftermath of the CPI report, which shows a very clear slowdown of inflationary pressure in the US, causing stock market to go up because the market was still expecting some kind of pivot or at least a slowdown drastically of the rate hike, but that was actually being killed off last night by the Fed chairman's speech. Okay, so the highest traded was 34,712.3 in the Dow Jones, and yesterday market saw a pullback, and it does give us the idea that this five-wave pattern has at the minimum has completed a five-wave movement, although it didn't quite hit my target of 34,842.9. Okay, but by and large, you can see that this pattern has almost finished. Minimally, it has already done a five-way because we have a marginal high compared to end of November high. Okay, so we can find sign that technically it may have already fulfilled its bare minimum requirement. There could be, of course, we cannot rule out the possibility of another rally, but again, upside is going to be increasingly limited. The risk will be to the downside. Okay, I maintain that this is going to be the case going forward. And then over in the S&P 500, prices also pull back in tandem to the Dow Jones. And the good thing about this is that the near-term support line that we have seen here from the low in October at 3,491 is still basically working very well. The market is hugging this line. Last time the market touched this line but did not quite break it. So again, there is still the possibility of another last rally into the 4,118 to 4,232 which is my original target range. This round the market high was 4,100.1. Okay, almost 4,101. So again, we can say that although the possibility of another surge remains, the upside is very limited. I am beginning to turn bearish on this, and I think over immediately after Christmas, we can see the market do come off. Okay, or at least at the latest by mid of January. Okay. Over the Nasdaq, we can see that the market did not attempt a very robust rebound, although it went up to as high as 12,166 in the aftermath of the release of the CPI numbers on Tuesday. But again, we can see last night we have a pullback, and it is also functioning very similarly to the S&P 500, in which the near-term support line seems to be holding the market for now. Okay, the downside is obviously more preferred than the upside. As if the market started to roll over, then I think the odds of the Nasdaq 100 outperforming the other two index on the downside is a lot greater. So I'm actually very keen to see development in the Nasdaq 100. Over in Asia, we can see that Hong Kong Hang Seng Index actually also fell back in tandem. The market did not challenge the last week high, which is traded last Friday at 19,926.5, almost just below the 20,000 levels. So again, we can see that this market unfolding a three-wave, and upside is pretty limited. Okay, even if the market can take out the 20,000 levels, I think you have to contend with the August high, okay, which I think is going to be a mountain to climb. More to the downside, especially if the near-term support line is taken out, very much like what we saw in the US indices, okay. Over in Shanghai, we can see the market also pulled back this morning. In fact, this whole week, the market has been coming down since the market traded to a high last Thursday at 3,225.85. Okay, this whole week has been pulling back, but you can see that this is a three-wave rebound. It means to say that market upside is quite limited, although it has a three-wave rebound, but it does look like there's still a possibility for maybe one more last push to challenge a September high at 3,278.16. So if this is the case, I think that will present a very unique short selling opportunity, although we technically cannot sell short the Hang Seng, the Shanghai Composite Index. Now, over in the Nikkei 225 this morning, we can see a pullback relative from yesterday's rebound. And this market has already done a three-wave pullback followed by a rebound. And if this is the case, because there's this high and this high overlaps, that means there is no possibility of a, oh, it's not overlap yet. Okay, so basically right now we see there is a three-wave rally followed by a three-wave pullback. And if this low is not below this 27,400, then there's a possibility of another run up to complete a five-wave. So I think there is still the possibility of market challenging not only the November high, it may even challenge the September high, but that should be the last hooray before the market unravels. So watch out for a possible continuation of this rally beyond the November high 28,500 to challenge 28,660 before everything falls apart. Okay. Over in the FX market, we can see that the dollar remains down after the release of the CPI numbers on Tuesday. And last time we have a marginal new low for the week, but then again this morning the market is rebounding. So by and large, I think we can see there's a five-wave pullback. Now, if we have a three-wave rally, either to the 38.2%, at 140.6 or even much lower. Let me see if I can get a reading at a much lower reading. Let's say I put in a 23.6 and see whether the market can even go there. So the market go up to 23.6, which is a very, very weak development. It means the market have a potential to go up to at most 138, and then that's it, and then market come back down. Okay, and near-term target is about the August low at 130.39. Okay, so at least we can see that there's a potential for another unfolding to the downside. Sterling, Sterling, based on what we have seen so far, the market has actually rebounded, actually quite strong. Okay, although it's a three-wave for now, it is relatively strong. And so far, last night it went up to a marginal high of 1.2444. And then before this morning, it started to lose steam. Again, very similar to the equity index, we can see that the near-term support line is holding this market together. But based on the fundamentals, we do look at the sterling being a candidate to the downside. Okay, so until the price action prove otherwise, I'm probably going to stay aside for a while. And once the market break this near-term support line, then I will take up a view, I think, which will be more or less bearish. My previous attempt to sell short was stopped out on Tuesday as the CPI number was released and the market went up to a high. So again, that last trade wasn't successful. I would attempt one more time, but this time only on a break of this near-term support line. Over in euro dollars, it's the same thing. I was also stopped out on my short position going to the CPI numbers on Tuesday. Market went up to a high, I think this high of 106.85. And this morning we can see that there's a pullback here. Again, very similarly to the sterling trade. There is a near-term support line that is holding this market intact. And again, despite my earlier attempt to sell did not work out, I think on the next breakout of this support line, I will definitely be looking very keen to take a look at the downside to sell short. Okay, over in the crude oil market, we have a continuation of the rebound from $70. The high traded last night was $77.75, and that is just under this near-term resistance line here. We will need to see whether it can actually bust through this line, and if it can, the next stop will be the December high at $83.34, and thereafter, which is my original target at $93.74, very, very near the $94 levels. Okay, but again, we need to see confirmation of this breakdown. And the latest news was yesterday we saw reports that the President Biden had actually intend to replenish his strategic petroleum reserve, which he had drawn down all the way leading to the midterm election, and now is critically low. The in terms of the storage, it is at a 40 years low. So they need to replenish this strategic petroleum reserve. And now President Biden has actually placed a floor on crude oil prices at $70 because this is the price in which they're going to start buying crude oil to replenish the strategic petroleum reserve. So that actually places a solid floor under the crude oil prices, and that should be very supportive of market. Okay, and then with China slowly to open up by further easing their zero COVID policy, I think the market outlook is actually quite bright because with the opening up, that means there'll be more consumption going on in the economy, and with that, China will have to import in more energy products, including crude oil. Okay, so I think it is basically a very bullish scenario going forward. Over in the precious metal, we saw that on Tuesday, upon the release of CPI numbers, the gold went up to $1,824, almost 50 cents. And similarly, I have my short position taken out on the release of the CPI numbers. It wasn't a good week for me because I took 3 losses in one day in 3 different positions, and this have not been great. But the only thing that is hooking up for me was my crude oil position, which I'm still holding on to long position. Now, gold prices started to ease this morning, so there is a possibility market may continue to ease back lower, and if you can go back to 1,725, it does look very attractive to reposition long-term long position, because my outlook for precious metals is very similar to crude oil outlook, which I'm very bullish, but for totally different reason. Because I've been mentioning about this idea that most of the buyers of gold has always taken delivery in London, and then London market has seen very, very tight supply that caused speculators to start looking into COMEX, the futures market in New York, for delivery, which is something very, very rare. And that also coupled with the fact that there's very, very low availability of stocks in the warehouse in COMEX. So that caused the market to be, I think there's going to be a short squeeze coming in, especially for silver. So do watch out for this very bullish possibility in the precious metal market. And I intend to go big time into a precious metal market. If I can get into silver, even better. I have not been successful in trying to sit in the silver position this whole time, and hopefully this pullback that we are seeing as of this morning can continue to lead to a lower prices for both gold and silver. Again, 1,725 seems to be I want to see what kind of reaction we get near this price as the market started to pull back. Okay, for now, can we go short? Yes, we can go short, but I probably would not want to do that because my last short didn't work out. So I think I want to go back to buying precious metals. Okay. Over in silver, we can see that silver market was on the relative basis, it's actually a lot firmer than gold prices. It went up to as high as $24.13. Now this morning we see a relatively sharp pullback, and there's a possibility it will continue to pull back all the way to $22. If this is the case, maybe I should start to look out for sign of stability and a reversal near the $22 levels, and hopefully I can sit in for this ride. Over in Bitcoin, we can see, now we go down to a lower time frame to see some kind of reaction. We see that crypto as a whole, except for maybe Binance Coin, everything has risen. Last time we saw a high of 18,375.8, and then this morning we saw the pullback. Now the market has come down to 50% of the pullback itself. Maybe it can stabilize. But by and large, my long-term outlook for crypto is actually quite bearish. Although we see a rebound from 15,500 almost to 18,400, but this move here, to me, it's very suspect, because first you have taken out this support turn resistance. So as the market go up here, this line here, and we extend all the way to the right into the future, this become a resistance line. Okay, so it'll be very interesting to see whether the market can go above and close above this line, at least in a 4 hours time frame. If it can, then it will be technically bullish. If not, then I think there is only a matter of time market unravel to trade lower. Okay. Ethereum is the same thing. Ethereum, we have a pull up recently. We can see that the market went up to $1,351, which is actually quite interesting. Let's see if I can draw this line here. Where would that be? So if the market continues to trade above this support line, okay, of course, in congruence with this other resistance line, you can see the market potential is not very high because it's going to get compressed by these two lines converging towards the apex. And as we move nearer and nearer into the future, this range of prices potentially can be quite restrictive. So definitely there's nothing up. If Bitcoin prices are not going to be bullish in the long term, which I think so, then I think the risk is to the downside. For Ripple, we are still in that no man's land in which the market is still waiting for some kind of verdict between the SEC and Ripple Lab, and we have a bit of news coming between, but still no resolution as of date. And the trading range has been very, very narrow, and that makes this coin, this token, totally untradeable in my opinion. So if you can avoid it, avoid it. The one thing that has actually come down when everybody is going up is Binance Coin. Now, Binance Coin lately has come under reports that the US Department of Justice is going to pursue a case in which they claim that Binance, the exchange, has actually laundered billions of dollars through their tokens, through their exchange. So if this is definitely a bearish development. Prices was actually looking quite stable from $250 onwards, but now with this pullback, with this news, now the market has come back to $254, and it doesn't look like the end. Any kind of rebound is going to be capped at $292. So top side is quite limited, downside remains open. Okay, so it's definitely not a good setup for buying. Over at Dogecoin, we are also looking for direction. Market has stabilized at 0.7 cents all the way to 11 cents, and then it lost back almost half of it to as low as 0.85 cents. So we can say that the market is still near this level. Technically, it does not look good. Okay, Cardano is not going anywhere. Cardano is basically just treading water. It has no direction whatsoever. Maybe it's basing, maybe it's just looking for direction. So the upside is quite limited. We have a three-way rebound back to 32, 33 cents, and then slide back to 30 cents. So this is definitely not a very bullish setup. Again, that could be also setting up a stage for a basing, which is a rounding bottom. But if you can avoid this coin, just avoid it. Okay. Solana has been one of the best performing coins this round in percentage term. You can see that the most recent low was almost at $11. It managed to go up to $15 last night. So this is a three-wave rally, and there is a possibility if this low here at $12.77 is not taken out, there's a possibility market can actually edge higher to $16.80 to $16.90 range. Okay, so the upside is still there, but again, it's quite limited. All right, guys, this is all I have for you today. I'm currently in Hong Kong, going to be doing a presentation for one of the brokers here in Hong Kong tonight, and then followed by an event in the Asia World Expo tomorrow and the day after. And until I get back to Singapore, this is all I have for you. Of course, tomorrow morning, we still have the same thing, but tomorrow morning, I think I have to do a very early recording because my event starts at 11:30. I'm going to be there way before that, and I will see you then. Bye-bye. Take care.